Hello and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me as always is Priyanka. And Priyanka, can't complain much about today's trading day because what a recovery we've seen from the day's lowest point, right? We had slipped below that 23,727.50 mark on the Nifty at the day's lowest point, and see where we've closed for the day. It's been a stellar recovery coming in for the Nifty. It's been a recovery of 235 points from the day's lowest point, looking good for the Nifty. But it's really the broader markets that took all the action ahead in today's trading session, because the Nifty mid-cap saw a recovery of more than 1,300 points from the day's lowest point. So that was a very stellar up move coming in on Nifty mid-cap. Has closed at the highest point of the trading day, and a 0.4% uptick coming in on the Nifty mid-cap. Nifty small-cap also didn't do all that much, but managed to close in the green from the day's lowest point. Also at the highest point of the trading day, has closed flat, but nonetheless we've seen a stellar recovery coming in across the small-cap index as well. Nifty Bank also has done decently well in today's trading session, a 0.3% uptick coming in. However, the advanced decline ratio continued to be in the favor of the declines today by a very decent majority. On the back of that, the India VIX spiked up 5% in today's trading session. We've closed above that 15.7, 15.6 mark on the India VIX. So that is something that needs to be eyed upon carefully, because a 5% uptick on the India VIX, a 4.7% uptick is where we have closed for the day when it comes to the India VIX. Overall, what was looking good for the market today was the entire Nifty Pharma pack that was shining away. More than 1% gain coming in across the pack. A good set of numbers from GSK. Glenmark has done well today. Ajanta, Aurobindo, Alkem, Lupin, Zydus Life, Torrent Power, Granules have all ended with gains of more than 2% in today's trading session. So Nifty Pharma was the real winner today. Metal, Energy, PSU Bank and Nifty Bank have managed to close in the green. On the flip side, Nifty Media, Nifty IT, your biggest laggards in today's trading session. Nifty IT down with cuts of 0.6%, followed by Nifty Auto and FMCG Realty has closed on the flat line today. That is what the market construct looked like in today's trading sessions. But nonetheless, we have ended in the green. However, you had a report coming in from Motilal Oswal today on the Q3 earnings. It's been the worst downgrade season, and this has been in the last 18 quarters. That was something that was important to watch out for, because now that we've drawn to an end on the Q3 earnings season, that was important to highlight. But Priyanka, lots of stock specific action as well.
Absolutely, see, but the more to this kind of reports, you have another view also coming in from brokerages. They say that at least this quarter was better than the last quarter, though the Nifty companies saw PAT growing only a single digit figure. But at least, yes, downgrades are going to come. There will be more downgrades, but lesser than what we saw in the last quarter. There could be a recovery from the first quarter of the FY26. So moving on, yes, you're talking about the stock specific action. M&M was in action today. However, Street was estimating the 30,000 initial booking is considered. It's a notable figure considering only the total EV sales volume per unit wise was 1 lakh in 2024. But then this one also fell short of Street expectation, and we saw M&M hammered badly, recovered later to close with a loss of 3.5%. But then there are reports which talk about BE, these two variants, especially the BEV, that could penetrate and gain a bigger market share later on. But then yes, dollar and rupee equation, if you look at dollar slipped below 107 mark. That was one respite for the emerging markets, and hence what we saw a kind of recovery in the in sector specific. But then a lot of heavyweights also did the heavy lifting today. Reliance closed in green. There was a report by Jefferies on Reliance also. There were banking names like HDFC Bank, SBI, public sector banks like SBI, even IndusInd Bank. They did a pretty good job today in lifting up the sentiment for banking stocks. And that's what we saw, though all the sectoral indices ended in red. But then there was recovery, significant recovery in spaces like Realty, PSU Bank, Energy, which recovered 2% from their lows. But now, what do we make out of it now? Is there more bounce likely? Or is it just a dead cat bounce, or is it on a technical front? Maybe we were in an oversold zone and there could be just a small respite, or will it have legs? Let's understand from Akshay Bhagwat, who's joining in. Akshay, good afternoon. Welcome to the show. Tell us about this recovery. Could we expect more respite coming in coming days? Of course, we are in an oversold zone. Mid cap, small cap have almost fallen in the small cap has already fallen in the bear category. Mid cap was just right at the door. What are you making of the index levels right now?
Good afternoon.
for
So
that?
yes, it's a respite that today the color has been green, the first day of the week, and level-wise, technically 23,800 has been shown respect by the market. So there are three, four multiple attempts which we have seen where bears did try to drag the markets down below the support, but they have been unsuccessful. So from a bull's perspective, yes, the today's closing above 22,800 is a positive way to look at the week, and it's just about how the follow through action comes in tomorrow's trading session that would hold the key. Overall, from a short term perspective, if you were to look at the Nifty, it is mighty important that Nifty manages to surpass and sustain above the levels of 23,200. After that, we can conclude that a short term bottom is in place. So right now, just a bottom in the making, first day of positive close, but it's a good move to start the week. I would suggest that if one is keen inclined on buying side, it's an excellent risk reward ratio which the market offers at the current juncture. Strict stop loss on long positions below 22,750. That's your stop loss you are working with on the buy side. And any recovery attempts will have targets of 23,200. That's the first target which you can look for tomorrow itself. And if it sustains, you can have higher targets in place.
So that looks good, at least on the index front. Akshay, hi, this is Snehi also joining in. Give us a sense of what stock-specific action you're expecting to see. Where are you seeing value amid a market like this?
Well, I believe the mid and small cap index is heavily oversold. So the chances are that there is going to be some recovery kind of a bounce rally, which I expect. The couple of stocks which I have selected, both of them are on the buy side. The first stock is Nykaa. So I believe the results were pretty strong in this counter, which came out last week. And after the kind of the roller coaster ride the index has been, this stock somewhere has held its ground, and 168 is the new support in the making for this stock from a short-term trading perspective. I'm looking at targets of 185 to 192 in the short-term scenario for Nykaa. Strict stop loss should be placed below 165. Second trade is in the chemical and fertilizer space, the sector which I'm pretty bullish on from a short-term perspective. Here, UPL offers the most excellent technical chart structure from a short-term perspective. A very strong uptrend is pretty much intact, and I believe the last 3-4 days of consolidative price action should soon give way for a momentum rally, which can see UPL targeting around 675 on the upside. You need to have 609 as a stop loss on this buy position.
A target, a buy target on Nykaa and a buy target on UPL. Thanks very much, Akshay, for your view today and your two top recommendations. But moving on, let's get you the word from the wise. How should you play the healthcare as well as the consumption pact in this kind of market? Trust Mutual Funds Mihir Vora believes there is value in looking at the premium pockets of consumption that like travel or tourism plays. Meanwhile, he believes there are no penetrative gains to be made for pure play FMCGs. Listen to what exactly he said.
In healthcare and all, it's more of a stock to stock situation. So I would kind of, pick and choose. But in general, in our portfolios, we are still quite overweight on the healthcare space also. Structurally, we are always more positive on the premium end of the consumption basket, whether it's in services or products. Services like airlines, hotels, a lot of things to do with travel and tourism and other services. I think that eating out, discretionary services like QSRs, etc. Those should continue to do well. Then on the other premium side, you have spaces like gems and jewelry. You have high-end auto, high-end real estate, etc. So those should continue to do well. Continue to do well. On FMCG, we are not that positive because it's a reasonably saturated category. So we don't expect any penetration gains to happen. And while the rural economy is coming back slowly, it's not a segment where we see double-digit growth on a sustained basis.
Okay, that's the word coming in from Mihir Vora. But let's also understand how Q3 has panned out when it comes to the earnings front. Motilal Oswal Financial Services has come out with a note on Q3 earnings roundup. The brokerage firm has cut the Nifty EPS by 1.4 to 1.8% for FY26 and 27. My colleague Sharad is joining us with more details on that. Sharad.
The Q3 numbers as per the note is disappointing, and this is the third consecutive quarter coming with a low single-digit earnings growth. Now, as per the report by Motilal Oswal, they have stated that the corporate earnings scorecard, if you look at it, it was modest. Now, it was driven mostly by the BFSI segment with positive contributions coming from two segments. The first one being technology, followed by telecom, healthcare, capital goods, and even real estate. Now, this is the third successive quarter of single-digit growth for the Nifty 50 companies, as they delivered overall on Nifty basis of almost a 5% PAT growth, and the estimation was also roughly around 5%. The large caps, if you look at it, they have been largely in line. Mid caps have delivered a beat, while small caps have reported a big miss. Now, that's the number which is coming, and that is why they have cut the Nifty EPS also by almost 1.4% for FY26, and for FY27 the number is on the higher side, coming in at 1.8%. Apart from this, also there are certain stocks which have actually dragged the EPS estimates down. They includes ONGC, HDFC Bank, JSW Steel, Axis Bank, and SBI. These are the larger names. And importantly, downgrades coming in from these companies, and the top earning upgrades, if you look at it for FY26, the names include Bharti Airtel, Hindalco, Tata Motors, Kotak Mahindra Bank, and Maruti as well. The top earnings downgrades, if you look at it, these includes JSW Steel, Tata Consumer Products, Tata Steel, Trent, and Dr. Reddy's Labs. But all in all, it has been largely a disappointing quarter. That's what Motilal Oswal has stated, and the earnings downgrade has been the reverse ratio since the first quarter of FY21.
So the picture looks similar, more downgrades, more misses than the hits. This is what Motilal Oswal also spoke about in this report. But talking about the big stock of the day, that was M&M. Srishti is here to tell us why Mahindra and Mahindra slid 3.5% today, why it was trading in the pressure throughout the day. Well, it notched record booking for its XEV, NE and BE on day one. Srishti joins in to decode the key triggers for this decline. Srishti.
Well, certainly, M&M did register the record booking for the newly two electric vehicle offerings for itself. Over 30,000 bookings registered on just day one. That actually creates a booking value of 8,472 crores overall. But the street doesn't seem to be that excited. Why? So we talked to multiple analysts, and what they're flagging off, that 30,000 number does look quite decent, but the street was actually expecting a number higher than that. What they're also saying that yes, of course, M&M has been doing pretty well in some of the other SUV ranges, but all in all, what we see is that some of the other launches in the ICE specifically have registered very great number just on the day one itself. But on the flip side, another mixed commentary that we are getting is some of the analysts are also highlighting that 30,000 on the EV front is not that bad, given that the market size is really small compared to the ICE portfolio overall. So quite a mixed commentary coming in from for M&M when it comes to the analyst community. But of course, the stock is down around 3.5%. Clearly suggests that the street is not excited given the record booking numbers for M&M, and the stock is reacting to that. But on that, Citi has actually come out with the note where they are also highlighting that the absolute volumes of BEV have been much lower than some of the recent launches, and they need to see how EV facility ramps up and what is the cancellation rate coming in for this one. But on the numbers, it's been a record numbers for M&M, and the company has also highlighted that 73% of the booking is for the top end variants, of which the deliveries will start from mid-March 2025. So all eyes on M&M. The stock has recovered slightly from the day's lowest point, but let's see what is the way forward coming in for this stock.
Okay, Shrishti, thanks so much for highlighting why M&M was under pressure despite its record booking numbers. But on that note, let's also shift focus and talk about some more buzzers that were gaining the attention in today's trading session. And my colleague Rabinder is standing by with a list of all of those stocks. Rabinder, take it away.
Well, GSK Pharma is in focus, where brokerages have raised their EPS estimate post Q3 earning, and ICICI Security has raised its GSK Pharma for FY25 to 26 to approximately 5 to 6%, and this was mainly due to better margin outlook, and they have upgraded the stock to add with target price of rupees 2250, and there are Motilal Oswal has also increased its earning estimate by 7% for FY27, and the brokerage has valued GSK Pharma at a target price of rupees 2170. Moving to next, IGL were also in focus on back of brokerage note, where Citi has maintained their buy rating on IGL with target price of rupees 250. They say that the company's volume and margin guidance is unchanged, and they expect CNG price hike in Delhi in the coming week. And the post APM cut allocation gas supply mix is now comfortable, and there is no major threat for EV due to their high cost and weak economic. Moving to next, Utkarsh Small Finance Bank were also in focus on Q3 result, where the bank's NNI was down by 0.5% from 482 crore to 480 crore, and the PPOP saw a decline of almost 28%. Company reported a loss at rupees 238 crore as compared to profit at rupees 152 crore year basis. And lastly, Zydus Lifesciences were also in focus, where US FDA has done an inspection at Zydus API manufacturing plant in Ambernath, Maharashtra, and has been successfully completed with zero observation.
All right, Rabinder, thanks very much for all those stocks and highlighting the news behind them. With this, it's a wrap on this edition of Your Trades. Thanks so much for watching. Stay tuned to ET Now for more updates.
If you like this video, then like, share and subscribe to ET Now.